stop everything you are doing right now and pay very close attention because the global financial order has just shifted beneath our feet in a way that is so subtle yet so catastrophic for the US dollar that 99% of the population will not realize it has happened until their savings have been inflated away into nothingness. We are witnessing the unfolding of a financial maneuver that historians will likely look back on as the precise moment the American empire lost its grip on the global economy. It is not a war fought with missiles or tanks. It is not a trade tariff war. It is a war of infrastructure, a war of trust, and a war for the very soul of money itself. While the Western media is distracted by political scandals and celebrity gossip, the People's Bank of China has quietly, methodically, and brilliantly executed a checkmate move against the US dollar that has been decades in the making. They have not just bought gold. Everyone knows they are buying gold. What they have done is far more dangerous. They have built a new operating system for the world's wealth, and they have just officially opened the doors for the rest of the world to move in. To understand the gravity of this situation, we have to look past the headlines and look at the plumbing of the financial system. For the last 80 years since the Bretton Woods Agreement in 1944, the United States has held the exorbitant privilege. We owned the casino. If you wanted to play the game of global trade, if you wanted to buy oil, if you wanted to settle debts between nations, you had to use US dollars and you had to route those dollars through the US banking system. This gave Washington the ultimate power. It allowed us to print trillions of dollars out of thin air and export our inflation to the rest of the world. It allowed us to sanction our enemies by simply turning off their access to their own money. It was a unipolar world where the dollar was the sun and every other currency was just a planet orbiting around it. But that system relied on one singular, fragile commodity: trust. Trust that the US would be a neutral arbiter. Trust that the dollar would store value. Trust that your money was yours, no matter what your political stance was. That trust was shattered on a specific day in 2022, when the United States and its allies froze the sovereign reserves of the Russian central bank. A shockwave went through the global south. It wasn't about whether you supported Russia or Ukraine. It was about the precedent. Every central banker in Beijing, in New Delhi, in Riyadh, in Brasilia, looked at their screens and realized the terrifying truth. If they can do it to a nuclear power like Russia, they can do it to us. The risk-free asset of US Treasury bonds suddenly became high risk. The dollar was weaponized, and in that moment, the demand for a Plan B went from a theoretical discussion to an existential emergency. Enter China. While the West was patting itself on the back for its sanctions, China was finalizing the architecture of the post-dollar world. And this week, we saw the unveiling of the keystone of that architecture. The Shanghai Gold Exchange has officially launched a new service that allows foreign central banks and sovereign wealth funds to store their physical gold in the vaults of Shanghai. Now, on the surface, this sounds boring. Storage? Who cares? You should care. You should care deeply because this is not just about storage. This is about creating a parallel financial rail that completely bypasses the Western system. Let's deconstruct what this offer actually means and why it is so seductive to the rest of the world. For decades, if a country wanted to hold gold, they typically held it in London or New York. The Bank of England and the Federal Reserve Bank of New York are the custodians of the world's gold. This gave the West massive leverage. But China is now saying to the world, you don't trust the US anymore? You are afraid your assets will be seized if you disagree with American foreign policy. Come to Shanghai. We will store your gold. We will give you segregated, allocated storage. This word, allocated, is critical. In the Western fractional reserve bullion banking system, there is a dirty secret. Much of the gold traded and held is unallocated. It is a claim on a claim. It is paper gold. There is a suspicion among many nations that the gold in London and New York has been rehypothecated, lent out to multiple people at once. China is attacking this weakness. They are offering a system where specific bars with specific serial numbers are registered in your name. They are offering insurance policies against political risk. They are offering third-party audits. They are building a fortress of trust to replace the crumbling trust of the dollar system. But here is the genius part. This isn't just a warehouse, it is a liquidity hub. China is allowing these nations to use this stored gold as collateral to trade and settle in renminbi, the yuan. They are creating a direct link between gold and the yuan. They are effectively saying, you don't need to sell your gold for dollars to buy oil. You can deposit your gold in Shanghai, receive a credit line in yuan, and use that yuan to buy oil from Iran or electronics from Shenzhen. It is a closed loop. It is a golden circle of trade that completely excludes the US dollar. Why is this happening now? Because the infrastructure is finally ready. China has spent the last 10 years buying massive amounts of gold, far more than the official numbers suggest. They have been importing thousands of tons through Hong Kong and Shanghai. They are the world's largest producer and the world's largest importer. They have drained the physical liquidity from the West. Now that they have the metal, they are opening the bank. They are effectively saying, we are the new London. We are the new center of gravity for physical wealth. And who is the target audience for this? It's the BRICS nations. It's the OPEC countries. Imagine Saudi Arabia. For 50 years, they have priced oil in dollars. It was the petrodollar deal. The US protects the kingdom, and the kingdom uses the dollar. But that deal is fraying. Saudi Arabia is applying to BRICS. They are trading oil with China and yuan. Now, China offers them a place to park their massive surplus wealth in physical gold, safe from US sanctions, while still keeping it liquid for trade. It is the perfect off-ramp for the petrodollar. If Saudi Arabia moves even 10% of its reserves into this Shanghai facility, it signals the end of the dollar's monopoly on energy trade. Now, let's talk about the mechanism of the exit. How does a country leave the dollar system? They can't just dump all their dollars tomorrow. If China sold all its US treasuries at once, the value would crash and they would hurt themselves. It has to be a slow, methodical rotation. This new gold infrastructure provides the mechanism for that rotation. It allows countries to bleed out of the dollar slowly. Every month, they sell a little bit of US debt. They take that cash, buy physical gold on the open market, and ship it to Shanghai. Or they buy gold directly on the Shanghai International Gold Exchange using yuan. Over time, the percentage of global reserves held in dollars drops from 60% to 50% to 40%. It is a death by 1,000 cuts. The impact of this on the American economy cannot be overstated. We have enjoyed a standard of living that is artificially high because the world needed our money. We could run massive deficits. We could have $35 trillion in debt. We could fight endless wars. We could have a welfare state. All because there was an endless appetite for our debt. The world had to buy our bonds to park their trade surpluses. But what happens when that demand evaporates? What happens when the world decides to park its surplus in Shanghai gold instead of New York treasuries? The demand for US bonds falls. When demand falls, interest rates must rise to attract buyers. We are already seeing this. Why do you think mortgage rates are staying high? Why is the government paying over $1 trillion a year in interest? Because the dumb money buyers, the foreign central banks, are stepping away. This forces the Federal Reserve to be the buyer of last resort. The Fed has to print the money to buy the government's debt. And that, my friends, is the definition of inflation. This gold move by China is an inflation machine for the United States. It forces the dollars that were circulating abroad to come home. There are trillions of paper dollars floating around the global economy, used for trade, used for reserves. As these countries switch to the gold yuan system, they don't need those dollars anymore, they sell them. Those dollars come flooding back into the domestic US economy. When you have trillions of dollars chasing the same amount of goods and services in the US, prices skyrocket. We are not talking about the 8% inflation we saw recently. We are talking about structural, persistent, double-digit inflation that destroys the middle class. The scary part is the silence. You would think this would be front-page news. China launches rival global financial system. But the Western media is silent. Why? Because to report on it is to admit weakness. To report on it is to acknowledge that the sanctions strategy backfired. The arrogance of the Western financial elite prevents them from seeing the reality. The world is tired of being bullied by the dollar. The global South, one which represents the majority of the world's population and the majority of the world's natural resources, is moving on. They are building a neighborhood where they don't have to ask permission to trade. Let's look deeper into the allocated versus unallocated aspect because this is the psychological key. The Western gold market, particularly London, is built on the concept of unallocated accounts. This means you are an unsecured creditor of the bank. You don't own gold, you own an IOU for gold. It is efficient, it is cheap, but it relies on the solvency of the bank. China knows that after the banking crises of 2008 and 2023 and the geopolitical freezing of assets, trust in banks is at an all-time low. By offering fully allocated, segregated storage where the gold is legally the property of the depositor and cannot be touched by the Chinese state, at least in theory, contract, they are appealing to the paranoia of sovereign nations. They are effectively saying, the West plays games with paper. We deal in physical reality. Whether you trust the Chinese Communist Party is almost beside the point. The point is that for many countries, the diversification of risk is worth it. They don't want all their eggs in the Western basket. This move also facilitates the digital bridge. China is leading the world in central bank digital currencies, CBDCs, with the ECNY. This gold infrastructure in Shanghai is likely designed to plug directly into the M-Bridge project, a digital currency platform being built by the Bank of International Settlements involving China, Thailand, UAE, and Hong Kong. Imagine a system where digital tokens backed by gold in the Shanghai vaults can be transferred instantly between central banks, completely bypassing the SWIFT messaging system. SWIFT is the tool the US uses to monitor and sanction global finance. If you build a digital rail backed by physical gold, SWIFT becomes obsolete. You go dark. The US loses its visibility into global flows. That is a national security nightmare for Washington. So, what is the timeline here? These things move slowly, then all at once. We are in the slowly phase. We are in the phase where the infrastructure is being tested. Small transfers are happening. Diplomatic agreements are being signed behind closed doors. We will likely see a headline event in the next 12 to 24 months. It will be a major commodity producer, maybe Saudi Arabia, maybe Brazil, maybe Iran, announcing that they are moving a significant portion of their sovereign gold reserves to Shanghai to facilitate trade settlement. When that headline hits, the floodgates open. It will be the signal to the rest of the world that the water is safe. And what happens to the price of gold in this scenario? It has to revalue. If gold is going to be the settlement layer for global trade again, even partially, it cannot be priced at $2,500 or $3,000 an ounce. The current price is suppressed by the paper derivative markets in the West, but as physical metal moves east as it gets locked up in vaults in Shanghai and taken off the market, the float shrinks. We will see a supply squeeze of epic proportions. The price of gold will have to rise to match the liquidity needs of global trade. We could be looking at gold prices that seem like science fiction today. $10,000, $15,000 an ounce. Not because gold has changed, but because the dollar measuring stick has shattered. But let's bring this back to you, the individual, the family trying to survive. Why does a vault in Shanghai matter to a guy living in Ohio or a family in Manchester? It matters because your currency is dying. The government is not telling you this, but they are preparing for a default. Not a hard default where they stop paying, but a soft default via inflation. They are going to print the money to pay the debt, and they are going to blame the rising prices on supply chains, or greedy corporations, or Putin. But the root cause is that the dollar has lost its monopoly. When you lose your monopoly, you lose your premium. The standard of living in the West is going to revert to the mean. We have lived beyond our means for decades because we could print money that the world accepted. When the world stops accepting it, we have to produce real value to trade. We will see a decline in imports. We will see shortages. We will see a decline in the purchasing power of wages. This is the financial World War II mentioned in the title. It is a war for your standard of living. So what is the defense? The defense is to do exactly what the central banks are doing. Watch what they do, not what they say. They are buying gold. They are securing physical assets. They are getting out of paper promises. You need to become your own central bank. You need to establish your own reserves. If the mightiest nations on earth are worried about the solvency of the dollar system, Why on earth would you keep 100% of your life savings in that system? This Chinese move is a wake-up call to diversify. It is a signal to own things that cannot be printed. Gold, silver, land, productive businesses. The era of the 60-40 portfolio, 60% stocks, 40% bonds, is dead because that portfolio relies on a stable bond market, and the bond market relies on the dollar's dominance. That dominance is ending. You need a portfolio that is robust to a multipolar world, a portfolio that survives the transition from a unipolar American world to a fractured world of competing blocs. It is crucial to understand that this is not about being pro-China or anti-American. It is about being a realist. It is about looking at the chessboard and seeing that the opponent has just moved their queen into a striking position. The U.S. is currently paralyzed by internal political division and debt. We are not in a position to counter this move effectively. We cannot raise interest rates high enough to defend the dollar because it would bankrupt the government. We cannot balance the budget because of political gridlock. We are a sitting duck. China knows this. They are pressing the advantage. The Shanghai International Gold Exchange is now the most important financial institution you have never heard of. It is the bridge to the future, a future where money is backed by something real again, a future where the exorbitant privilege is history. For the elite who run the system, this is a terrifying prospect. For the prepared individual, it is an opportunity. The transfer of wealth is happening. It is flowing from west to east and from paper to hard assets. You can't stop the tide, but you can learn to surf. Don't let the complexity of this bore you. That is what they count on. They count on you tuning out when you hear central bank reserves or trade settlement. They want you watching sports and arguing about politics while they dismantle the engine of your prosperity. But now you know. You know that the game has changed. You know that the floor has been removed. The golden exit is open. The nations of the world are lining up to take it. They are moving their wealth out of the dollar's reach. They are voting with their feet and their gold bars. You should consider doing the same with your personal economy. Get out of the splash zone. Move your wealth into assets that don't depend on the swift banking system or the Federal Reserve's promises. This isn't the end of the world, but it is the end of an era. The era of easy money is over. The era of hard choices and hard assets has begun. The Shanghai move is the firing gun. The race is on, and the prize is survival. Make sure you are running in the right direction. We must also consider the potential for a gold trade note. There are rumors that part of this new infrastructure includes the issuance of trade notes backed by the gold in Shanghai. Imagine a bond, but instead of paying interest in devaluing dollars, it pays interest in gold weight. A bond that protects your principal and pays you a yield. If China introduces a sovereign gold bond to the international market, it would suck the remaining capital out of the U.S. Treasury market so fast it would make your head spin. Why would a sovereign wealth fund hold a U.S. Treasury paying 4% in a currency losing 10% purchasing power, when they could hold a Chinese gold bond paying 2% in a currency, gold, that is appreciating 15% a year? The math is undeniable. Capital flows to where it is treated best. Right now, capital is being treated very badly in the West, and China is rolling out the red carpet. The tragedy is that the U.S. had the gold standard. We had the trust. We blew it. We blew it in 1971 when Nixon closed the gold window. We blew it with decades of reckless spending. We blew it by weaponizing the financial system. Now we are paying the price. The correction is here. It's not a stock market correction. It's a currency correction. It is a correction of the imbalance between paper claims and real reality. China's move is simply the catalyst that accelerates the inevitable. The dollar was destined to lose its status eventually. No currency lasts forever. But by building this allocated storage infrastructure, China has shortened the timeline from decades to years. They have removed the friction of leaving the dollar. They have made the divorce easy. So, as you go about your week, keep this in the back of your mind. When you see prices rising at the pump, when you see your insurance premiums go up, when you see the deficit numbers climb, remember Shanghai. Remember that there is a giant vacuum cleaner in the East sucking up the world's real wealth and leaving us with the paper. It explains everything. It explains the volatility. It explains the desperation of our leaders. But you have the power to act. You are not a helpless observer. You can front-run the central banks. You can buy silver while it is still cheap. You can buy gold before the mania phase begins. You can educate your family. The information is out there, but you have to be willing to look at it without the rose-colored glasses of normalcy bias. Things are not normal. We are in uncharted waters. The launch of this gold infrastructure is the financial equivalent of the Suez Canal opening. It changes the trade routes. It changes the flow of power. It bypasses the old gatekeepers. The US is the old gatekeeper. China is the new route. Don't bet against the change. Adapt to it. Position yourself for a world where the dollar is just one of many currencies, and gold is the king of them all. That world is arriving faster than you think. The Shanghai vaults are open. The game has begun. Your move. The sheer scale of the logistical operation China has undertaken is also worth noting. They didn't just build a vault. They built a network of refineries, logistics companies, and insurance frameworks that meet international standards. This was a massive undertaking of state capability. It shows their commitment. They are playing for keeps. This isn't a crypto startup trying to disrupt finance. This is a civilization state with a 5,000-year history executing a multi-generational plan. They play Go, we play checkers. In Go, you surround your opponent slowly until they are suffocated. This gold move is a classic encirclement strategy. They are surrounding the dollar with a ring of gold-backed trade agreements and infrastructure. And let's not forget the role of the populace. In China, citizens are encouraged to buy gold. The central bank encourages it. In the West, gold is mocked. We are told it's a pet rock. This cultural difference is stark. The East understands value, the West understands price. The East is accumulating value, the West is chasing price. Who do you think will win in the long run? The accumulator of value or the chaser of price? The warning lights are flashing red. The mechanism for the dollar's demise has been constructed, tested, and activated. The button has been pushed. We are now just waiting for the lag time between the action and the consequence. Use this lag time wisely. Use it to get your house in order. Use it to escape the trap of paper assets, because once the consequences arrive, they will be brutal for the unprepared. History is a harsh teacher. It teaches us that he who holds the gold makes the rules. For 80 years, the US made the rules because we held the gold, and then the military power to back the paper. Now the gold is moving. The rules are changing. Don't be left playing by the old rules in a new game. Understand the Shanghai move, respect the shift, and protect yourself. The dollar's sunset is the gold's sunrise. Make sure you are awake to see it.